Samsung shares tumbled 7.5% on Monday after losing a patent battle to Apple. Hertz has agreed to buy Thrifty for $2.3 billion, completing its 2-year pursuit of the smaller rival. I'm Lindsey Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street, and together we bring you the morning call. Summer is coming to a close this week. We enter the last week. August has been a great month for traders. Scott, how are you setting up trades going into the week?
Well, I think last week some traders pulled back, switched some gears, because for about a week or two, you had great action. We were following the accelerated uptrend, and you literally, I think I was holding on average like 6 to 10 positions. And then once we started getting towards the highs, you had to figure out whether or not we break and go through the highs, or do we push through, fail, and cause a little bit of a rest. And bear in mind, we have a lot going on in the end of this week. We have Big Ben. We have in Europe starts to come back, and those big dates will be rolling around in September. So I think, if you did put a cautionary approach on in the midweek of last week, I think now it's just a question to see how we hold higher.
Well, let's take a look at the chart, because I know that you closed out of a tactical short position towards the end of the week. What made you decide to do that, and what was its signal for you?
Well, you trade on many different time frames, and for a while we were just methodically going higher, and stocks were participating, and you didn't take much pain holding a lot. So then finally, I saw my first, reversal type of strategy. First push through failure that said, you know what, let me get out of a lot of my longs that I've been trailing and get a little net short. But once you get net short, you really never know where you're going to go. You can put some projections out there, some levels of interest, so that's why we like to use pivots and we use price points. And the strategy we use with that is the red dog reversal. So you see two of them here. If you look at the chart, you will see, your first red dog reversal outside day happened right here when you traded through this prior pivot of just say about 14.18, went through 14.22, came back below. That could have been your short setup. You said, okay, I'm out of my longs. I've been trailing them ever since we broke above this area, this 13.95, and then we also went below this little accelerated uptrend. So on this day, I got out of some longs, got a little net short in these 2 days. We closed below it. But then this was your Thursday. So you had 1400 as your pivot. We just went from 26 down to almost 1400. That's 26 handles to the downside. So, a little bit of a correction. And then what you saw on Friday is we opened lower. And once we traded back above 1400, that's 1398. That was an area to say, okay, let me get out of some that have been trailing for this move. And, and then you said, I want to give it some space. I think I covered the rest of my shorts once we reclaimed this low here of about 1406, 1407. So it wasn't a blockbuster move, but at this point, I'm happy that I covered. I'm back in Apple. I'll probably put on some other positions as long as we hold above, this 1398. So I think building a new floor here will give us another chance to potentially break out and this time not fail and continue. But, from this day to this reversal, two tactically, short-term reversals that we teach in our momentum class, our swing trading class, our active class, you could have, saved yourself some money and booked some profits.
Yeah, exactly. Well, we're going to get into the sector spotlight with the metals because they had a great move last week. We'll take a look at gold first. They've been able to hold their most recent gain very nicely. But what's the tiering system that you're using when you're looking at trading this?
Well, earlier in the week, gold and silver were getting really tight, and a lot of people have been watching it. And we've tried this trade a few times, and it was frustrating, and it didn't work. But then, you know what? Finally, it worked. Finally, it was ready. So we had price points to buy, to add to get to like a tier 2, besides being in a feeler. So if you look at gold, you will see here, gold started to get really, really tight coming into this area. Silver actually broke out first. We'll get to that. So right here, it was your tier 1 buy. This was when you said, okay, I think it's going to break above. If it gaps up, I want to have some. So right here is your tier 1. Then you had an inside day, into that gap up. And then really it was this day where you could have got to your tier 2 once it crossed above this high here and showed you continuation. And then, on what's it called, Thursday, I'm like, what, for me, I'm getting out. This is a nice 4-day trade. But, if I was in my office, I probably would have bought a little bit back. So I was like, look at this, no real pulling. We didn't even come into this gap. We didn't even come back to the 8th day. So at this particular point, all you could do is measure the speed. If you're a macro investor, guys are saying we're going to see at least 166, 167 and higher. So if you want to just sit and not trade, that's cool too. For me, I'd love to see another day or so that it hangs out here, and then I'd like to be a buyer above this high here of 162.45 for continuation. But right now I don't have a position. You know, every time when things really move fast, they don't wait for you. So you have to be quick and you have to take a little risk. If we don't go to and we hold, I'll probably get back into a feeler the same way I had here, and then hopefully I'll have the opportunity to add above this recent pivot for what could be, you know, a nice quick move up to 166, 167.
Now, silver is up about 10% since you put it on your price point sheet. Does this one need to take a rest? Is it something that you should take profits in?
It's the same thing. You know, Thursday I actually sent the text out saying if you got in at 27.45 and added at 28 and change, you know, this is your day to sell some. Not a day to initiate a new position. Like you, after 4 up days in a row, even if it goes higher, I just have a problem with people buying on the 4th day, because even if you go a little bit higher, you're probably gonna have to sit through some type of digestion or rest, and you know, a lot of guys can't hold through that. So if you look at the chart here of silver, you will see, you know, this day it ignited well before gold, and I think I was in like a feeler right here as it looked as if it could have happened right here, but it didn't. It had another inside day, and then this was tier 2, right when it broke above this resistance. Then I think into this gap open, I sold a little bit, not necessarily tier 1. Then on this move right here, I got into my tier 1, and then on this gap up, I got flat. I said, you know what, I'm done with it. You know, done with it for now. It's a nice move, but you know, it's not really pulling in. So it might not give you the time. And right now, as it rests in front of the 200 day, you know, another day or so of sideways action, traders will be buying this above 29.88 for a follow through to what could be, it looks like a move to, what is this, around 32? Why not, right? 32, and then the beginning of this move, like what you saw in gold, doesn't come into about 33.25. So there is some more upside here, you know, that you could see in silver. Question is, do you want to just buy and hold and trail it, or do you want to trade around it? But sometimes if you trade around something that moves really fast, the problem is once you get out, you don't get back in, and then it just goes without you. So you have to be okay with the fact that, you know, you took the trade off and you didn't get back involved. So if you're not going to get back involved and you want to be in longer, I would say just sit in gold and silver. You'll probably see some higher prices soon. Okay, now oil, it's had a great run since the end of June. It's making a base above its 20-day. What's the next level that this one can break out at? The OIHs, you know, oil's been on the move, and I haven't really been trading oil, but every time I look at it, it looks like it's holding higher. You know, the OIHs was a laggard group, started to act better, you know, this summer, and since then it's been continuing, and a lot of stocks have acted well. If you look at the chart here, the OIHs, you'll see finally you had a bit of a reversal down here into the lows, but this wasn't that drastic, it wasn't that easy to see. Really, it was this commitment right here that got guys involved. You saw this gap up, you know, it went sideways above this recent low, didn't fill this gap as a group. So this was your accumulation period. Then it started to get going again once it broke above. And since it's been riding the 8th day, I showed you the spiders. The spiders actually held the 21-day. This didn't even make it down to it, so it's showing some relative strength. I think this is a group that's acting better, something to continue to watch. You know, you look at some stocks within the group. I think Schlumberger, you know, is nice and tight. It looks like if it gets above 75.5, it can continue. You know, I'm not going to run through those charts, but you know, look for some alpha within the OAHs because I do think there's some good acting stocks there too.
Okay, and then copper, it's had a bit of a improving trend lately, but it's still, there's a descending channel that it's in right now. What level do you think that you could get involved in this one?
I just think it's something for the macro. Everyone's saying that gold, silver, everything's going up just because of, you know, stimulus, just because of QE. Copper actually goes up if, you know, you see a little bit of demand and a little bit of manufacturing. So, you know, copper, you know, guys are trading the contracts. I think stick with that if that's what you're doing. You know, there's opportunity there, but, you know, as a trader, you have to really sit there versus get involved as far with patterns. So just watch it, make sure that it continues to trend and that dips could be bought there and it's not a fake out.
Okay, well, we're going to take a quick commercial break and get back into the trenches with tech, so stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're getting into the trenches with tech. Over the weekend, the big news was the Apple-Samsung lawsuit. Apple won, of course, and the stock got a nice pop off of that. And this is a stock that we talk about almost every time we're in here. So what's the trade now?
The trade now is hopefully you had some. You know, every time we talk about trading the intermediate trend of Apple, I'm always like, as a macro investor, stay the course. As a macro investor, if you have 5 to 7 positions, this is one that needs to be in your portfolio. As a swing trader or someone that trades on a short-term time frame, it's also giving you a ton of opportunity. I've looked at the chart here of Apple. You will see, ever since this was the earnings where it missed, after 2 days of rest, it went right into that gap, right above that 580.80, and when 3 days went through and didn't even care about it. So right there, that showed you the power, showed you to, don't worry about this earnings. Every fundamental analyst guy gets upset about it, but technically it was a great buying opportunity. And this is when I started to get back involved with a little bit more size, right around 603-ish. And then you had a lot of multiple entries. Here was a multiple entry when it went above 620. And then you had another nice one right here. And then actually when it took out the high of 644, it gave you a quick beeline move all the way up to almost 675. And then if you remember, this was the day I said, I'm selling some that I've been trailing and holding ever since, almost around that 603. And then we had a cute little short, and then what happened? You had that red dog reversal when it traded through that low and then sort of no downside follow through. You always wait to see what kind of downside follow through. Let's get a little closer here. And there was none, right? You remember we talked about in the price point sheet, 650.33. It went only as low as what? 648, so that was another nice entry. Then it did the same thing on Friday. Traded through Thursday's low of 661, came back above it. And this type of flagging pattern above the prior highs gave me some conviction to say, let me put some stock back on because I know I'll be a buyer once it crosses 670, 675, and then lo and behold, you get this news of the sweeping victory. I think it's above 680 right now. Say short term, make sure that if they do try and sell it down, it holds above 675 because if you want short-term momentum to stay there, it should stay above. And if you're approaching it like me, I would say if you're on an intermediate time frame, which is what I'm on, okay, I've already sold half above right around 680 this morning, and I'm holding half. So what that means is I always trim some in the morning based on how many positions I have to book some. So booking 17, 18 points, you don't go poor, booking some profits. But I still have some on, and I'll see the composure in the first half an hour. If it could hold higher and it doesn't pull in and doesn't go below 675 and you see a nice flag, it could continue, and who knows, it could see 685, 690 today. But for someone who's just approaching it and never was long Apple, to buy it here above 680, even though it can go to 700 plus, I think you missed out on a lot of strategic opportunity. As a trader, if you're coming in and you just want to revenge it and be short, just be careful there too, because again, if it doesn't close below 675, this thing could be 700, and that's the wrong side of the trade. Every time I've made money on the short side of Apple, I feel like I stole something. The right trade has always been to buy the dip, and it seems like every sell is a bad sell considering it's at historic highs now and it's rewarding equity investors that have stayed in it for the long term.
Now, Google is feeling the pressure from the Apple victory this morning. Is this a pullback that you could buy, or do you think this could be more of a problem for Google and maybe some of the competitors?
There is a lot of talk that they won now the hardware case, and now there's a few software issues that they can battle if they want to. If all of a sudden they want to start battling everyone, which I don't think Apple wants to do, Google seems like it could be next. So at this point, Google's down like 7 points. Google's been acting unbelievable since its last earnings report. It's at the highs of the year. It's still about $100 off the historic highs, or a little less, of 747. For me, I'm not that smart. I don't know exactly what's going to happen, but I'm going to let the action show me. So if you look at the chart of Google, you see here that here's your upper level support. Okay, before this little court case, it looked unbelievable, and I was ready to buy for momentum through 680. Who knows? You might even still be able to do that. But for right now, it's opening around $7 down. Your pivot low here is about 662. I'd say as long as it tries to hold 660, 665 today, I think that the street's taking its stride. If it closes below that and closes on the lows, then we'll have to figure out whether or not this next support gets into play. But for now, if it opens up down 7 and goes positive, you're going to see it break above the 680, and every short in there is going to get squeezed. And for me, I'm going to watch it off the bat. What you want to do is you want to see some type of divergence. Down 7 points, futures come in. All of a sudden, Google comes off the lows, diverging. Futures don't bounce. It continues, and all of a sudden, you get a nice cash flow trade to fill the gap. But just take it slow with Google. Let's let the street show us, because there's a lot of smart money in there.
Netflix is a little more of a beaten-up stock. It's down 20% since its earnings. What level of support does this need to hold to really stay in the game?
Netflix is so far out of the game, I can't even believe we have it in this sector. I got to talk to my producers in the back. How'd that happen? Anyway, just kidding. Stock has been an unbelievable trading opportunity this whole year. It's ignited a few times. It's given some short patterns a few times. Right now, it's just in a void. It's not worth our time today.
Amazon put in a new high. Are you trading this one?
Now, this is a different story. This one's acting well, gave you a nice entries a few different times, one being on earnings that ignited the move, and the earnings weren't great. So it just goes to show you that, even me, I'm like, I don't really love Amazon, the business model, the valuation, but who am I to say, whether or not my love is going to matter? Look at the technical action. If you look here at Amazon, the day of earnings, look at this ignition. Look how it ignited above this downtrend, ignited above 228, 230. So it didn't matter what I thought. The stock said, you know what, we're giving it a pass, and it was a nice buy. Then it consolidated above this. So it wasn't a flash in the pan. It wasn't like a computer algo going nuts. No, it was real buying, and then it was supported. And then, ever since then, this is when I think I got long for the first time right here, right around this 238, played it for a day and a half. And then, I've been not really involved because I don't sit in that one. I tried to trade Apple a little bit more. It takes a lot of my time. But this one went on Friday. It was strong early, giving some traders, a heads up or a high five to get in there first. And now it's down like a half a dollar on the Apple victory. I think it's fine. I think it'll take it in stride. Going from negative to positive, if it pushes through 246.87, all of a sudden we're back at historic highs. And look at the historic highs right around the corner here, and it's basically right there. So at this point, it's been a nice move. I don't think to initiate Amazon here. I think you're chasing as a trader. There's some opportunity right into this area. I'll watch it, but I'm not going to be enamored with Amazon.
eBay, it's extended above all of its key moving averages. So do we need to wait for more of a pullback to get involved in this one?
This one has been more of like an investment vehicle hold because only now and then do you get good trading days, but there are some. And it's been acting well. Both earnings it came out were impressive. Gapped up both times, giving us our gap strategy where stock gaps up on earnings, doesn't fill the gap, holds a big portion of it. It typically goes in that direction. And look at eBay. It's a good example. I might even put it in my swing trading course. Because look, gap up, sideways, 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 sideways. Never came in to fill this gap, so it showed you that demand kept this thing higher. Here's your little reversal for an entry. This was your trade right there. Came back in. Another gap up. This time didn't wait as long and it's just been trending higher, hugging the 8-day. Great investment vehicle. Stay there if you're long it. And as a trader, just pick your spots because not every day you get follow through.
Well, now it's time for quick hits. We're going to start off with SunTrust. The banks have been performing well lately. This is one that Stephanie Link owns. Last week, the Federal Reserve Board approved their capital plan, so we should be seeing some dividends or buybacks in the very near term. Stephanie bought on some of the pullback that we saw last week, but from a technical standpoint, what do you see in the stock?
I'm going to defer to Stephanie. If she's buying it, I think that you can get involved because she knows what she's doing. Technically, actually, I'll go back real quick. Put them both there, and stock is hugging the 8-day. So as long as it stays hugging this, I think you're fine. Even if it goes to the 21-day, you have a little pivot top right here. Just make sure if you're in it short term that it doesn't break below the 21-day moving average.
VALE, another Stephanie Link Action Alerts Plus stock. It's her play on China and also the Brazil stimulus plan, the $60 billion plan we just heard about. This stock, she really likes it here. I don't know though. The macro concerns had a pullback on the end of last week.
Well, if you were not involved in the stock, right here is an opportunity because it's been a disaster. This entire year it's been nothing but a sell. But every now and then you get a capitulation type bottom where you get some type of reversal to trade and use as a benchmark. And as I look at this pattern, I see it right here. This is somewhat of a, just say a priced in hammer bottom. Could be the end of this move to the downside. Look where this thing has come from. It tried it here and had a nice move off it, came back in, so it wasn't enough. What I want to see is let's see some volume. Let's go to basic studies. Let's see the volume. Was there any volume on this day? Not like extreme. Like look at this extreme volume that came in right there that gave you a nice move here. Better volume than you saw in these days. So at this point, if you're trading it short term, make sure it holds above 1664. But this is something to build on it. The question is, can they build on it? And I do think that China as a whole, if you have a lot of time and you have a big time horizon, I think buying China down here, even like the indices overall, I think you put it away and it'll be something worth a lot more money than it is today. But it could take some 2 to 5 years if that's what you have time to look at.
Yeah, well, LinkedIn is trading in a tight range. What's the levels that we should be looking at in this stock?
See, now, like, this is more of a quick hit that I look at for a quick hit. You know, it gapped up on earnings, gave you a quick move since then. It's been a little frustrating. Right now, it is holding above that 104 from earnings. It really has to get above 107 with volume, with some authority for traders to get excited. I bought it a few times at 107 and lost money trying it. You know, you take a quick look at the chart, you'll see right here, it hasn't been able to get above and stay above. So right here, you know, your stop could be 104. If it starts to get above 107, you know, chances are it's on the move. And this one, you know, it's in a very negative space. People hate social media stocks. They're all priced wrong. The investment bankers turned into piggies versus investment bankers by giving it a high valuation. So all their first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th round investors could get a free lunch off the public. But anyway, that's a different kind of rant. 3/4 of good earnings for LinkedIn. And at this particular point, if you're an investor, just, you know, be a little careful that don't have too much. This group's still not loved yet, but if the group starts to get some love, this is best in breed here for momentum above 107. That's when I'll probably be looking to nibble.
Then just last one real fast, LVS is a casino stock that you've traded but you booked your profit in. Is that what level could you get involved in it again?
Okay, well, this is a good example of change of composure. In the beginning of the year, it was an unbelievable vehicle to ride. It reached our targets, and then it became a sell. But then, you know, we pointed about it, we tweeted about it. You know, I want to show you how you could see a low. This one actually had volume to confirm it. You go to the chart LVS after this top, this red dog reversal up here, breaking support there. You know, it finally had a nice reversal on earnings right here. Look how it opened at lows, closed at highs. What we have right there is a capitulation bottom. And look at the volume right there. Wow. Then he saw some commitment. Here was another level to buy it. Have a nice beeline move. Got tight again. I think we had this on the price point sheet right around 39.64. Gave you another quick beeline up. And now it's in a net. Now it's going to be a little choppier. The easy part of this oversold trade is in the bag. And now I think it's just going to be somewhat methodical. It's still below the 200 day. I would say at this point, you know, held in there on Friday. So as long as it stays above this level here, above the 8 day, above 42-ish, I think that it could set up for another trade, but I'm not going to probably buy it and just hold it. If it starts getting above 43.70 with some time, I'll look for momentum. At this point, I'm trying not to have too many positions as we're in the last week of summer. It's been a great month, and there's no reason to complicate things right now.
That makes sense. Well, we're out of time, so check in at the end of the day for the daily recap with Scott and the T3 Live team.